Good morning. My name is Matthew Roszak. I am co-founder of Bloq, along with Jeff Garzik. And I want to start by sharing two things. One is I've been a tech entrepreneur, venture capitalist for my entire career, and investing in companies, investing in entrepreneurs, co-founding companies. I was always missing something. I was always missing this change the world dynamic. You see some entrepreneurs that have that, and they're like, "I'm going to change the world with this." Some of them were a little silly because it's like a Candy Crush competitor. So how are you going to change the world with that? So I was always kind of like laughing at those. But in the abstract, changing the world was always like a thing that I was missing in my career. When I came across Bitcoin, crypto, blockchain, for the first time, I felt like I could be a part of that narrative and be a part of this ecosystem to make that proverbial dent in the universe. And that's what kind of motivates me to be in this ecosystem. Secondly, the gatherings like this are super important. We are still in the stone ages of crypto and blockchain. We have a lot of work to do to build this technology frontier and build the adoption along with it. But at the same time, you all are in the right room at the right time. These are the formational days of this ecosystem, and I've said this a lot, and I love repeating it. This is a generational opportunity for entrepreneurs and investors. That's once in a lifetime, and so it's pretty exciting times. And just to kind of format some history and build some mental models here. There's this old adage of money is power, right? Typically reserved for the few. And with the advent of cryptocurrencies, now money is technology. And so technology is now power. And transpose money with money in terms of the unbanked or the billion people in the world that don't have identity. This dynamic is changing with this new technology frontier of crypto and blockchain. And we're seeing that picture come into focus, kind of looking back over the shoulder. Look at some of the most valuable companies in the world. They're technology companies. Gone are the days of GE and Exxon and what have you. They're all tech companies. And more so, when you kind of click for more detail today and kind of spread it out, they're actually more like networks. And if you look at some of the biggest networks and companies in the world today, they have no cars, they have no hotel rooms, they have no inventory, they compose no content, and they're some of the most valuable companies in the world. And networks are powerful, networks matter. And you even look at Bitcoin, which has no CEO, has no branches, has no customer service department, is about $250 billion, depending on the day, money rail that is decentralized. And so, but new tech is always scary, right? This is like my personal kind of experience and journey with new tech. And at each juncture, I remember just terrible interfaces, terrible user experiences on each and every one. And so a lot of people are like, well, what am I going to use Bitcoin for? Crypto is so, it's speculative, it's got little utility. We're in the early days, stone ages, and we're seeing this stuff come into focus. And with Bitcoin, that's kind of what got us all in this room together. That 9-page white paper from Satoshi Nakamoto kind of built Token Fest and us getting on planes and showing up here. This is a big deal. And so that inspired a public-facing Satoshi in Vitalik Buterin, who invented Ethereum. He tried to do that on Bitcoin, but wasn't able to, so he spun out and did his own project and built a decentralized global computing platform, which created this Cambrian explosion of innovation and finance. We've seen historically $6.5 billion raised on token offerings, over 500 projects. CoinMarketCap has got 1,500 line items and growing. That is innovation. That is something profound that's happening right now. And you look at some of the layers that are getting tokenized, some of the layers that are getting reimagined on those networks that are now turning into these digital cooperatives, right? You contribute something and you get something back. And so you look at Amazon Web Services, right? They're 2 times as big as Google and Microsoft and IBM's public cloud put together. But then you look at all the excess compute power, excess storage, excess utility that's out there that's getting now organized and contributed, and you look at AWS, kind of the anatomy of it, and each layer now has somebody trying to organize on a blockchain with incentives these new layers of what decentralized web services could look like. And I'm sure we're going to have provisioning layers on top of that to make it easier, et cetera. But it's interesting to see these platforms come about. Identity, one of the biggest use cases of blockchain. And here you have Civic, which is an amazing start, amazing kernel for this part of the story. And we don't feel like we own our own identity. I mean, between Google and Facebook and Target Hack and Equifax, it's really hard to feel comfortable that we own our own identity. But if you have a partitioned one where you provision something for a mortgage or a job application or a hospital, or going to Target and buying a laundry detergent, those are different partitions of your identity. That's what the future will look like, not just for us, but also for companies, and then for machines, which really helps kind of the Internet of Things dynamic. Without payment, without identity, it's just kind of like things. So these are really important pieces of the scaffolding to really see that come true. And even securities, tokenized equity. This was something like asbestos or nuclear waste. Nobody wanted to have a security token over the last couple of years because it's got all this regulatory fabric and all this overhang that entrepreneurs didn't want to deal with. Now, people are going headfirst into this space. Tokenize your cap table. As a startup, as an entrepreneur, you'll have different investors trading things differently on different platforms, and we'll create another Cambrian explosion within this space. And you have 2 market leaders here, T0, which is creating a compliant platform, an exchange in this space, and then Polymath, which is a software platform to help tokenize equity. So we're going to see more and more of this, I think, in the back half of this year, where we're going to see a couple of imprints in the space, much like Blockchain Capital did last year. They did a small $10 million equity token, and that started people thinking about how to create that at scale. And then if you look at enterprise, this is like the march of the enterprise into blockchain. So not a single bank or financial services company, and quite frankly, every industry is now trying to figure out what their blockchain compass is. Financial services are very self-aware. The disintermediation of what they do is at stake. And I say this to bank financial services CEOs all the time. Like within a decade or so, you'll be in front of your board and saying the center of what we do is now free. It's a service. It's a layer. And so how do you kind of reverse engineer how you kind of build up to that and create other value-added services with some of the strengths that you have? And so that's a really important piece for CEOs to think through as this picture of these digital cooperatives comes into play. And financial services never had a great experience with new tech. I mean, look at internet. Yeah, this is duct tape and an egg and a nutcracker, right? So you look at every juncture between internet, Y2K, mobile, 2008, you name it. Kind of got through that, but now there's this stampede of unicorns that makes fintech and crypto and money transfer a lot different. And banks today don't necessarily worry about the bank across the street. They worry about these networks like Amazon and Alibaba and Apple that could create a money layer, a checking account, a savings account, borrowing, lending, all this stuff within their own networks. That's actually what's at risk here. And in terms of enterprise adoption, we've seen this movie before with the internet, with cloud, and certainly with blockchain now, where the adoption is cost cutting. It's if you're regulated and public, you can't just jump into this disruptive phase. You have to kind of navigate through it. And a lot of the use cases are on cost reduction. So trading and settlement, compressing timeframes, cheaper data flows, blockchain-defying workflows, compliance, et cetera. Those are all really important ways to get in. and get involved. And these big companies that have people, process, tech that don't move very fast, there's actually like antibodies in big companies that almost reject new tech, because it's new, it's scary, it's a risk, and the regulatory dynamics aren't as clear. But starting, even on a cost reduction use case, is a very smart move. It'll open up doors they cannot see. And then you kind of get into growth and transformation as it evolves. But this is what banks did and a lot of companies did in the internet days. They built intranets and then extranets. In the cloud days, there was a hybrid cloud where they kind of had some data in-house and some data out of the house. And so we're seeing the same dynamics play out. The key thing here, and this might be bold to say, but using blockchain technology as rails internally to move data and value is not the point of blockchain. The point is, in my mind, the value is creating these new economies that are tokenized, that create incentives for what you contribute. That's what's going to be the big deal. But you can't get there unless you kind of work through your workflows and everything else. So enterprise is going through that phase now, but you can't discount what's happening outside the window in this new, $250 billion, $500 billion asset class is being built, and something's happening there. So you have to pay attention to that. And again, this new asset class, and these are like carnival tickets, right? Because they're these tokens, they're utility tokens. And what does that mean? It means two things. One is you now have democratized access to capital. The goat herder in Ghana, the taxi driver in Indonesia can now invest in this stuff. That's pretty amazing. Two is you have new form factors to play into this new economy. You have new wallets, new exchanges. All the porcelain around this infrastructure is different. That's a big deal. And then lastly, the nature of an organization changes, because you have typically in a traditional organization, you have a shareholder, you have a customer, you have an employee, you have some suppliers, and they all have vastly different incentives. If you could put a token together where it kind of shares that same incentive, it changes the nature of that organization dramatically. Imagine Uber with a token or Facebook with a token. I mean, Facebook and Google sells our stuff every day. We do not get a paycheck at the end of the month. They sell it, market caps of several $100 million, $1 billion, and we don't benefit from that. If you create a token to incentivize and kind of draw a circle around all those participants, things get really exciting. And so this is the dynamic of, there's these two worlds under construction right now. You have this old world, these incumbents that are very powerful, very strong. They have brands, they have networks, lots of customers, and they have a regulatory edge. That's going to matter for a while. And then on the other side, you have the proverbial bank of one, the whippersnappers that are decentralizing every layer of Amazon, identity, money, etc. And so these two worlds are literally both in this kind of wet cement dynamic in terms of blockchainifying and creating these new rails, this new operating system for business and government. And then on the other side, you're seeing this whole explosion of the tokenization of things. I think over time, these two worlds will connect. There'll be some collision. Whenever there's like such a different medium of value in these tokens, the players historically have changed whenever you have such a seismic shift. And this is how we've organized Bloq. So Bloq goes to market this way, where on one side, in Bloq Enterprise, we provide some of the biggest companies in the world with tools to engage in this new technology frontier. So wallets, APIs, nodes, all the connective tissue to connect to this new decentralized world. And our customers are twofold. It's the Fortune 50, so top 5 bank, top 5 insurance company, top 5 supply chain, top 5 credit card. So some of the biggest companies in the world. And then also some of the biggest crypto companies in the world. And so top 20 market cap crypto companies that want to engage with enterprise customers. So it's interesting. So the enterprise customers want to engage with the crypto world, and then the crypto world wants to engage in enterprise. They still use the same software in between. So that world is slowly getting defined above and beyond the use cases of blockchain that we hear in the generic sense. And then on the other side, so Bloq Labs, so we've paid attention. We've been kind of looking outside the window for the last couple of years, and we've seen this amazing explosion of innovation. And so with that, we've partnered with some really interesting projects, whether it's Quantum and Civic and Dragon Chain. And so we've gone from advising, being technical advisors, co-founders, to actually launching some of our own projects out of Bloq Labs. And again, these two worlds that are under construction will ultimately connect. We'll ultimately use the same software and scale in that way. One of the projects that we're launching within the next 30 days is a new cryptocurrency called Metronome. And so it's very unlike an ICO or any other token offering, but fundamentally, what is it? It's a new novel cryptocurrency that's built as a abstraction of any digital token or any cryptocurrency you've seen before, because it's cross-chain. It's the world's first cross-chain cryptocurrency. It's born on Ethereum, but you can move it to any other EVM, Ethereum Virtual Machine. And that's an innovation. That's something that's not happened before, part one. Part two is when we launch and we sell the Metronome tokens in this auction, all the proceeds go into a smart contract, then go back into the Metronome ecosystem through liquidity and price support. So it's not like, does it go into some obscure foundation? Does it go into Bloq? This was a way to create some kindling for a new cryptocurrency. And looking forward, in terms of, there's all these cryptos out there. The healthy cryptocurrency has kind of the three-layer totem pole of a store of value, payments, so coffee and jeans, and then machine to machine over time. That's kind of the future of how you'd want to, with a blank sheet of paper, do that. My co-founder, Jeff Garzik, is the creator of Metronome, and that's what he did. He basically started with a blank sheet of paper and said, what would you do now, almost 10 years into this, into Satoshi's vision of what could happen, and we employed some of the best technologies to develop Metronome. So I'll finish on how I started. This is a generational opportunity, and it's much less about money or technology. This is a movement, and thank you for your time.